Now, about the industry, we have close to about 6,000 plus, fintechs, so-called startups. The value is worth more than 30 billion, and India Stack is one, ecosystem to basically address the issues of the fintech industry. Okay, this is just a idea. One industry, this thing we have. I think in terms of value of digital payments, I think UPI. Everybody has a, of course, Paytm has recently been, barred by the regulator. But I think otherwise, in terms of saying unified payment interface, I think those Google Pay, everybody, I mean, all of you, I'm sure, have it on your mobile phones, saying you want to pay small sums of money, you pay that. Your bank account is linked to that. Okay. Now look at this is the market performance. This is from the Harvard, business review. This is a performance which basically look at the green line. Now, as compared to all the other, PayPal, JP Morgan, etc. And this fintech companies' performance has been, way above, everyone else. These are some, fintech unicorns, as far as India is concerned. A large number of them, they've all, some of them are public. Something like, Paytm, of course, Zerodha is not. These are all, I mean, like Grow, for example. Grow is a brokerage. Then financial services. Let's see how many financial services really come into the fold of these entities. They're all $1 billion plus, which is now trends are digital lending. Can anybody tell me what why digital lending is slightly more difficult than digital payments? NPAs, because in lending, when you say you have a counterparty risk. Question about that: is it the platform's responsibility to recover the money, or it's the individual responsibility to recover the money? If there is a lending, and secondly, at what interest? They are saying it's a competitive bidding. Okay, so how many people who are going to bid for that? Okay, or whether the other party, how does you fix the price? Those are issues which are open in digital lending. Wealth management. I'm not sure. I've been part of portfolio and wealth management industry for some time. Wealth management is not a business which is done by computers. How far it will go, I have no idea. But I'm simply saying is that wealth is a matter of trust. I don't know how many of you are willing to give your balance sheet to me, okay, if asked for. Okay. Now, even on a computer, it's all good. Yes, fintechs. I'm sure that the industry is very gung ho. Startups are gung ho about a lot of things. But is it? How far they'll go? Very, very tough to say. Even portfolio management. Yes, surely you can create systems wherein you have a mechanism to manage portfolios. You may have strategies, but can they? People like Renaissance Technologies or Warren Buffett or which is, I mean, Jim Simon, Warren Buffett, Peter Lynch, John Templeton, Bill Ruan, Bill Miller. I mean, are they Howard Marks? Their abilities may be unique, but question is, can systems create those exceptional performances? If system can create that, will it sustain? No, if extraordinary performance is automated, it's no longer extraordinary. Right? And I think Dogs of the Dow, O'Shaughnessy's, when he published his saying, you buy the bottom 7 companies based on the PE, okay, the lowest PE stock this year. Next year they'll outperform. The year was published. Subsequently, they all did poorly. A strategy which is doing fine today, once it is published, does very, very poorly. Okay. That's a matter of debate. We can have that. We would see. Once we come to challenges, we'll look at that. Insurance technology, digital payments, blockchain. Now, one is a digital payment framework, and second is a blockchain technology on which the entire, your cryptocurrencies are based. It's a very, good technology which can really help in terms of transforming the space. But those are still in the uh, in the arena of uncertainty as to what it can create in terms of and what challenges will it bring. Deal making. I was teaching a course on investment banking, and I was surprised that 30% deals of $1 billion plus was done by platform. And deal making, investment banking was like insurance. It was always a matter of like insurance was a matter of solicitation. The deal making was a question about that you approach the company, the valuation, negotiation, all those were skills. Okay. So wherein at what price you are willing to sell the company or buy the company. And if it is done by saying automation machines, there is some change which is happening. And we need to be aware about that. And then, this is very interesting. JP Morgan once said they are technology company. They're not finance company anymore. They also, SAIL used to have that we also make steel. They used to do a lot of social activities. Okay. Now, similarly, today, for example, we are looking at finance companies. They are also doing finance, but they're technology companies. Okay. So they have a large number of technocrats as opposed to a large number of MBA finance people. Okay. So that is a one metamorphosis into technology, because as technology takes the center stage, okay, finance only becomes like you could sell anything today. Amazon, for example, okay, platform or marketplace. Today they have the financial muscle to really disrupt any business. Okay. And robo advisors. Okay. Of course, I think there are several case studies which I taught in wealth management. Robo advising again is the same, that you have set patterns, set strategies, and robos, machines. Robos is nothing but a machine, program machine. They advise you in terms of managing your wealth. Fintech trends. I would say that there is a government, industry bodies, and startups, and the entire ecosystem is trying to create a digital infrastructure in a way. I think which was enabled by something like your e-governance, infra created by saying UIDAI, which is saying Aadhaar. Okay. If you link your bank accounts with Aadhaar, your PAN card, etc., okay, then you have an identification. I would talk about the problem subsequently once we come to the risk about it. And then one is a lending and borrowing, a framework where the borrowers and lenders get together. Here, the traditional banking function is getting in a way. The banks today are getting disaggregated. So small part of the banking is taken by one fintech, small part of the bank is taken by another fintech. Okay, so all your function as a bank are basically being replaced by the so-called new technology companies which are selling finance on their technologies. Okay. So in a way, it's like a crisis of existence for banks. Okay. And that's the reason why most banks today, either they have acquired or they are getting into creating a fintech subsidiaries, which will help in terms of fighting off their competition. And then retail payment services. There is a UNE, and they are also creating what is called central bank digital currency, okay, to regulate cryptocurrencies. Digital commerce. I think commerce is a large part, and how their ONDC is a body which is creating. So government has taken a number of initiatives to transform this entire fintech space to involve more and more people, and this is being seen as as smartphone penetration has gone up sizably. The government and industry bodies or startups, they are thinking that fintechs can really make banking accessible, banking available, or other products available to one which are not part of those services as yet. Okay, how far? I'm not a skeptic. I'm very optimistic. However, I think those challenges we need to look at, and how do those challenges are overcome. Now, problem, financial literacy. I would discuss some issues here, which might startle you. But it's important to put the things in framework. The millennials, people like you, uh, I think it seems, I mean, this is one, I read an article some time back wherein that people have a trust deficit with the banking system, and they would much rather keep their money with the Apples and Googles of the variety rather than keep the money with the bank. Kal doob jayega. Okay. My money will be lost. Okay. I do not know what is the reason for that, but I mean, India particularly, or their experience in the millennial last 20, 30 year experience hasn't been very good with the banking. It used to happen in 1920s when the central banking came into play, and then we had a long period wherein the banking was safe. And just to give you a reference, Glass-Steagall Act of 1935 in USA, and which was repealed in 1999, that gave to the crisis of 2008 in global financial crisis, which was basically segregating the commercial and investment banking functions, okay, globally. So that's the reason why today, for example, maybe you have seen 1999, you have seen the 1970s or 60s. Okay. So you find that these are much better. And of course, data privacy. I would have a point or two to make on the data privacy part. Now, in terms of this is a global survey. I'm just taken out from data from one particular study. So this is covered basically 5 areas: digital lending, payments, capital raising, banking, and insurtech. And then the 6 areas. It virtually covered the most large part of the areas. Now, demand is strong and is consistent across regions. So there is some resilience in the fintech. Increasing interest rates, funding, trust you mentioned about that people are not willing to. If you're not willing to tell me who you are, why should I give you money? Now this is regulatory environment. Most are happy. Some are thinking this is cumbersome. Okay, it has to be, and I'll tell you why. It should be. It should be. And funding environment, 34% say growth is supporting. Okay, and also involves to, and this is, I'm talking about global fintech trends. So globally, across regions, people feel that there is a, financial services, there is a possibility of providing them to less served segments. You can look at including those people, those are not yet served by the fintech.